Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Tuesday, November 22nd. U.S. stock futures are holding steady, following heavy losses in equity markets around the world yesterday. The sell-off was prompted by growing concerns about the ability of European leaders to address the region's debt crisis, as well as the anticipated failure of the deficit supercommittee in the U.S. After the markets closed, the co-chairs of the committee confirmed that they failed to reach an agreement to reduce the deficit by $1.2 trillion over 10 years. As a result, spending cuts equal to that amount will take effect automatically in 2013.
Analysts say the failure of the supercommittee raises questions about the government's ability to tackle bigger problems down the road. But for now, the ratings agencies are holding their view of the country's finances steady. Standard & Poor's said that the committee's failure is consistent with its decision in August to downgrade the U.S. credit rating. And Fitch Ratings said that it will conclude its review of the nation's sovereign debt by the end of the month. Fitch previously said that if the committee failed, it would probably result in a cut in the U.S. rating outlook to negative, but a downgrade was less likely.
This morning, many investors seem to be sticking to the sidelines ahead of the Thanksgiving holiday. They're also digesting the latest reading of U.S. gross domestic product. The first estimate showed 2.5% growth in the third quarter. Then later this afternoon, the Federal Reserve will release the minutes from its November meeting. We are seeing some action in the commodities markets. Prices there are trending higher, with crude oil jumping back above $98 a barrel. The Secretary General of OPEC said that the markets are balanced and prices are at a comfortable level. The statement indicates that the organization could keep its output quotas steady at its meetings next month. Iraq's oil minister previously said OPEC could cut production.
On the corporate front, we're keeping an eye on shares of Hewlett-Packard. After yesterday's closing bell, the company reported a big drop in fiscal fourth quarter profit. HP's bottom line actually beat Wall Street estimates, but revenue also slipped, and the PC maker scaled back its earnings outlook for the current quarter and the full year. HP shares are dropping more than 1% on the news. We're also seeing a steep decline in shares of Netflix, down 5% right now. The company raised $400 million in common stock and convertible notes in order to strengthen its balance sheet and help it return to profitability. Separately, Canaccord initiated coverage on Netflix with a sell rating. That's the latest from Weiss Research. We'll be back after the opening bell with all the economic data and market-moving news, including a warning from the government for Bank of America.